So before we get started, I want to introduce you. This is for our listeners, this is Mr. Rick Lindsey, CEO and owner of Prime Insurance Company, owner of Xinsurance. I'm not sure there's other entities that you own, but Rick is an ex-athlete himself, was a hockey player for quite some time, and he now owns an extremely successful insurance company. He's been in business for over 40 years. He is relentless, he's aggressive, but he's also a very kind man, very business savvy. So Rick, just a little bit about you, where you were born, a little bit about your background.
Well, I was born in Salt Lake City, Utah, to Mormon parents, and I played football, then I got into hockey and actually tried out for the Olympic hockey team in 1979 and got cut at the end cut. And that's when I started working for my dad's MGA, and that's how I learned the business. Was we had 20 markets. I call them slaughterhouses, where they have the pen for 20 different markets, and they're trying to help local agents place stuff that they can't place in their traditional markets. So in 1986, there was an insurance crisis. Federal law was passed called the Risk Retention Act, and that's where I started doing national programs. Met a guy in New York, owned Homestead Insurance Company, and he let me run my own little company for 10 years. I did the claims, took cases to court and won, and then he went broke from the Northridge earthquake, and that's when I took over Prime in 94.
In 1994.
Right.
Wow. So, and your dad was in the industry as well.
Yeah.
How was it working with dad? Did you learn anything from dad?
Yeah, I mean, he taught me everything I know. Right. He ran a life company, he ran the MGA, a local agency, and after we built the risk purchasing group business up to 94, 93, and they went broke. At that point, I wanted my own insurance company. I wanted to take risks because I thought that's where we could really make money, putting our skin in the game. And my dad, he didn't want to take any risks. So in 94, we split the business. I took mine and he went with his. And he's still in business today. He's still an agent.
Your dad's an agent?
At 87 years old. And his favorite market is Hiscox because everything's online and he can do it right from his computer. And if it fits the box, you get a policy. If it doesn't fit the box, you got to go somewhere else.
Well, that's amazing. 87 and studying insurance.
Yeah.
That's awesome. So real quick, 1979, you were in the hockey team. When is it that they won the upset?
81.
In 81. Right. Did you know any of those players?
Well, I played with them all. I went to hockey school with them in Sun Valley, Idaho, and Aspen, Colorado for probably at least 8 years before they asked us to try out. Mark Johnson, his dad, and Art Berglund, they ran the hockey school, and they were the ones who helped pick the Olympic team. We went to Squaw Valley and lived for 90 days, and it was a lot of fun.
You told me something on your plane that really solidified why it is that I like to learn from you. You said, there's people who have told me to retire. And you said, my life is a damn vacation.
Right.
I don't need to retire. And to be honest with you, I get up every morning and I love what I do.
I guarantee you wouldn't like working for other people, just like me. I think that when you have energy and success, everything I do relates to sports, right? So I call the legal system that we play in, I refer to it as a game, right? And lawyers, when they depose me, and in court, they even use that against me to try and make it like to be a bad thing. Like, Mr. Lindsey thinks this is a game. And I honestly believe the judges sit up there when the lawyers are saying that, and they think it is a game.
It is a game.
And you guys are just mad at Mr. Lindsey because he's playing the game better than most of the insurance guys, right? If your opponent's weak, has the wrong strategies, has the wrong partnership, it's not as good a partnership as it could be. And so, when somebody sues you frivolously, that's when you want your insurance company to do what's right, not play the game the way that, the insurance companies have become settlement machines. When I was an agent or broker, you're dealing with a client personally, and, they get sued frivolously, and the insurance company overpays the claim and then cancels them. Mm-hmm. And that's a reflection on you as the insurance company or as the insurance agent, right? And the insurance company changes their appetite. They used to like trucks, and now they don't want trucks anymore. And again, that's a reflection as you as an agency. And so, I try to insure classes of people. Insurance companies insure classes of business, right? We like trucking, or we like bodegas, or we like grocery stores, right? They attack. And the truth of the matter is, in every business, there's bad and good people. Insurance agents, there's good ones and bad ones. Insurance companies. So, when you start an insurance company and you go buy reinsurance, there's a long list of things that they exclude, like pollution, explosives, trucking over 500 miles, towing and repo. And so they've actually identified those classes as high risk or unprofitable classes of business. And, my reinsurance, I have no exclusions. That's something that, I've always done that stuff. So over the years, as I've developed my relationship with the reinsurers, I've told them, look, if you're going to do business with me, you're not going to put any exclusions on my policy. Now, as long as I continue to make money, they're not going to put those exclusions on. But if you started an insurance company, and you would have those exclusions, they wouldn't just eliminate them for you, and they'll take them away from me too. That's why I take this so seriously and so passionately, because I owe the insureds, I owe the producers, and I owe my reinsurers, and I owe my shareholders. I owe everybody to do the right thing. And so, in football, in hockey, to me, it's not rocket science. It's common sense. The law in our business is common sense. And I think that's where most people lose it. They hire an actuary or they hire somebody else smarter than them when, I'm not a genius. I just make good common sense decisions based on partnerships. If you have a bad partner and you're trying to keep things common sense, it's not going to work out.
And it's funny because one of the things that you don't use that word partnership loosely. And I think that's a word that's used very loosely in all businesses, but specifically in the insurance industry. And in your website, you have the partnership advantage. And if you read it, I can tell you guys that when Rick talks about a partnership, it ain't smoke and mirrors, it ain't bullshit, it's real stuff. He wants to know the client. He wants to know the insurance agent. He wants to know the person making the decision, because the key question that you always ask in a meeting, and I had never asked this, Rick, I identified it from a different perspective. But the first time I was in a meeting with you, you asked our client, you said, who are you under pressure? And when you said that, it was like an enlightened moment in my brain. I said, oh my God, that's such a key question, because I look at it as does the guy want the ball when the bases are juiced?
Right.
Or is he going to walk out and be, I crave clutch moments.
Right.
Right. I lived for that as a kid. I dreamed about that as a kid. I wanted to be able to bat down two and, the winning run on second and hit a 2-1 jack. Right.
Right.
So in business, I look at it as a game myself, where I'm able to collaborate sports and business. And I'm like, it's who are people under pressure? And when you're dealing with the average human being, I don't mean this in a bad way, some people don't handle pressure well, Rick, as you know, and they fold under pressure. And that's when they want, they're calling you, Rick, I need you to settle this. And you're saying, but hold on a minute, dude, you're not negligent. We didn't do nothing stupid here, like you always say. And if we did something stupid, I'll be the first one to cut a check. So talking about that, you always talk about how the insurance industry has been commoditized. And people think, and you've quoted this before, where, you're out there buying bananas at a grocery store, and they don't understand risk transfer. They don't understand, well, I bought this for $5. I don't got $5, so you insure for $5, and I'll charge you $2, and if I pay out $2, and I got to charge you $7. So I'm in the business. When did I feel like you've been waiting for this game your whole life, to be honest with you. This is the game where, big time players make big time plays in big time games. This is what you've been waiting for. Where did the industry go wrong? When did this whole thing become about market share and a commodity? When did that start to happen?
Well, I remember back when I started working with my dad, and he came home and said, the lawyers can now advertise on TV. And so my own, simple explanation is the lawyers, all of them, defense and plaintiffs' lawyers, have evolved over the last 40 years, and insurance companies still think their job is to just settle claims. So to me, it's like the bully on the playground. Okay, so, and sports is the same. If you're up to bat in the pitchers and you're intimidated by the pitcher, and you think he's going to kick your ass, or you think the bully on the playground is going to kick your ass, you're going to lose, right? Now, luckily in real business, in America, we have the best court system in the world, right? The bad thing about our court system is it costs a lot of money. So to me, when you're buying insurance, you're not buying a little company that's going to overpay claims. Just like, when you go to a bank and you need $1 million loan you don't want them to short you and sell you down the road because they think that's a better outcome for them. You want them to stand tall and spend the extra money because they believe in you, right? And insurance companies don't do that. I compare it to punching the bully in the nose on the playground. If somebody sues you frivolously, it's all about intimidation. Every lawyer, defense and plaintiff, are risk adverse. So they're going to do their deal, spend all the money, and then they want to settle everything because to them, there's no benefit to the potential loss, right? Well, if you're the insured, if you play the game that way, everybody ends up wanting to be self-insured. I mean, over the last year, you've probably heard that more than anybody. 5-10 years ago, insurance was cheap. Nobody wanted to go self-insured. Now they think they're paying too much money, so they all want to form a captive. Everybody that forms a captive is going to realize that all they've done is dug a deeper hole, right? Because now you're risking your own money, and you're hiring the same reinsurers, the same TPAs, the same people. So that's why I tell people, look, what you want is an insurance company that can actually execute. So if we're in the NBA Finals or we're in the World Series, you don't show up with a team that you haven't practiced with. You don't have communication with. You don't have a good game plan with. When we show up in court in these big cases, we kick ass because the insured and me are managing the claim and the lawyers. When the lawyers are managing us, we're going to lose because they have no skin in the game. The case we had over in Naples, the quadriplegic case, motorcycle ran into our truck. I tell everybody, and I believe this, that with any other insurance company on the planet, that would have been $1.4 million or worse. And we got rid of it for $40,000. And, that insured is now happy, but he's on our website. He's one of our testimonials, but he doesn't want to talk about the claim. But he will, I don't believe he'll ever leave us because of that experience. He wanted me to pay the $1 million. And I basically talked him off the cliff, told him just relax and let's play the game. Let's take the pitches, let's swing the bat, and we're going to knock it out of the park. And we did. If you always acquiesce and you let the bully have the playground, then our life's a shit show and we've missed the opportunity to win frivolous cases. Now, if you're at fault, if you run somebody over and it's your fault, we should be going at them trying to pay the claim. You shouldn't sit back and wait for the lawsuit, which is what most insurance companies do. And frankly, most insureds do because they've been trained, don't report shit. I say, why didn't you report that claim? Well, it wasn't my fault. So do you know how stupid that sounds? You're in America, the most litigious place in the world. Anytime you get involved in an accident, these people are going to see 50 TV commercials telling them they can get free money. And so, that's kind of the way the trend goes.
And here you hear more, the Morgan and Morgans of the world and all, they're doing their job. They're playing their game, and we're playing our game.
They play it better than we have for 40 years. And really, Prime isn't magic. We just play the game the right way, right? We have the right teams. I don't insure people that don't at least agree with the strategy going in, right? Then when shit hits the fan, you find out how people are really going to perform. Some lawyer's going to be telling them to tell me to pay some baloney claim, and they have to look at their own lawyer and tell them the same thing I do. My lawyers tell me you should settle this, Rick. And I'm like, you know what? I appreciate that, but that's not the way we play the game. I didn't take their money to sell them down the road and pay a claim because it's cheaper, which in the long run is not cheaper. As you pay bullshit claims like that, you only get more of the same.
Correct.
So, you gotta get a reputation for being fair, paying every penny you owe. But if you're trying to leverage us, I'll spend 10 times more money than you think I will. And I'm doing it. Our state of Mississippi's suing me. I could have settled for $600,000. 3 years ago, I've spent $2 million. Now they'll settle for $158,000. And I'm like, no, not paying it. They're wrong. I'm right. My own lawyers are telling me, you should probably think about it, right? I'm not thinking about the dollar numbers. I'm thinking about the future that creates it's like a foundation of a building and you start pulling bricks out. Oh, we'll settle that case. We'll settle that case. And before you know it, you've got an unstable foundation of your building.
And I think that what you're doing is that you're not setting yourself up for failure moving forward, because if, I feel like a lot of attorneys know the insurance companies are up against it. These guys are going to settle, these guys are going to settle. But if they know that you're a fighter when it comes to a frivolous, and it's important for our listeners to know that Prime isn't in the business of not paying claims. Prime is in the business of being fair and representing its insureds with professionalism, class, and fairness. And I think going back to reporting the claims, that's common sense. Now, I've spoken to so many attorneys where they tell you, well, we don't want to report that incident because it's going to affect our loss runs. I'm like, no, it's not. It's just an incident. It doesn't mean
if it's going to affect your premium, then you're probably with the wrong insurance company. If you can't report, if you're really partners, if there was no such thing as insurance and everybody had their own in-house lawyer, you would tell them immediately about everything that's going on. So the fact that you're paying money to an insurance company that you have to think, I don't know, should I report this or not? That's kind of an indication that you don't have the partner you need. Because if they were a great partner, you'd be telling them everything. There wouldn't be anything hidden.
And it's almost like, again, they're transferring the risk to a third party. There should be a partnership, Rick, right? I mean, I'm telling you, I'm entrusting you, Rick, with my assets. You and I should be able to have an open book conversation and a transparent conversation versus this conversation as if you're against me. And somehow I think that the insurance industry lost its feel for what clients are looking for and whatnot. But
let me tell you this. So back when I first started doing river rafting and helicopter ski guides, you got 100 river rafters, and somebody dies in the boat from a heart attack. Right? They didn't even fall in the water. Now you could pay them the $1 million. And some outfitters would say, well, that's why I buy insurance. The guy died in my boat. Let's pay him $1 million. You can do that, right? So now somebody falls out of the boat and drowns. You definitely got to pay them if you paid the guy who died in the boat from a heart attack, right? Now you get into who are you going to let go on a whitewater raft trip or not? So, one of the things I did with an outfitter in California that wanted to run Class 5 whitewater, I said, okay. I went on the trip with him and I said, if you'll make them swim across the river and back before they go on the boat trip, then I'll insure you. Because on this trip, it's extreme enough that they are going to end up swimming. So if you don't make them do that, they don't know the real risk. right? So now that's assumption of the risk, right? If I get there and my wife says, I don't want to swim across that rapid, then you say, well, you don't want to go on this trip then because it's dangerous, right? If you're happy to swim across that rapid, then you can go on the trip. So he was good with that. But then there's other outfitters who say, I don't want to make them swim a rapid. That's why I buy insurance, right? I want to take everybody, whether they want to swim. Well, that's a lot different risk. That's a whole different partnership. So if you want to take anybody down the river, whether they're willing to assume the risk or not, your price has got to be 100 times
higher.
Right. If you'll eliminate the highest risk people by trying to scare them off, and that's the key, is a lot of people are like, I don't want to scare people off. That's why I buy insurance. No, that's not why you buy insurance, right? The assumption of risk, even in auto accidents, comparative negligence, all of that stuff comes down to what should you pay, right? The law says you don't have to pay anything unless you're liable. But you can pay claims all you want. You can pay $6 million on a claim that you only have a $100,000 limit on. And insurance companies do it all the time. They overpay claims. They ask insureds to kick in money. So if you have $1 million limit, it's a really bad claim. I've seen it happen. I've never done it. And I've had lawyers propose it to me. It's like, well, you pay your $1 million and have the insured kick in another $100,000 and we'll settle this. And again, you can go there, right? I have never had to ask one of my insureds to kick in a penny ever because you don't have to. But you can always acquiesce. You can always pay more. And so it's kind of a mindset. That's why I ask insureds, I'm like, what do you want to do, right? If it's a lawsuit and you're part at fault, part not, do you want to pay the amount you owe? Do you want to pay more than the amount you owe? If you're not at fault, and somebody's unfortunately injured and they have kids, and you're not at fault, and you don't have to pay anything, do you want to pay them? Because some people do. And that, it's expectations. It's what are we trying to accomplish here? In my world, the lawyers are winning. They're getting rich. That's why they can advertise on TV. Morgan & Morgan is now like a $7 billion law firm or something nationwide. Insurance companies are saying that the legal system here is out of control, nuclear verdicts, social engineering, we can't control the claims cost. That's why they're canceling everything.
Well, there's an article that was just posted on the Insurance Journal, and there's 2 bills that are trying to be passed in Tallahassee. And one of them is about attorney fees just not having a limit. I guess they can just bill the insurance companies whatever they want. How do you feel about that?
Well, I mean, again, they're trying to control the legal fees to some extent. In most cases, it's the percentage they can collect. Okay. So if they get $1 million, they can't get more than 50% of that. Okay. But, depending on the case, right now, in most cases, the plaintiffs don't understand the real way the numbers are going to work. So if you get $1 million award and your lawyer says it's a 50-50 split, they're going to split it 50-50 with you after they take all their money and expenses. So if they spend $300,000, exactly. Now you got $700,000 left to split. And, in some cases, lawyers reduce their fee to 1/3. There are some states who are starting to limit their ability. But in most cases, it's the of the award, because what you spend on a case, I don't think you can question that. It's like me. If I want to spend $3 million fighting state of Mississippi, you can't tell me, Rick, you can only spend $1 million, right? I can invest poorly or rightfully in any case I want to.
At your risk, yeah.
Right. The big thing now in the legal community is there's these companies who are now funding lawyers. So if you have a good case, an investment banking firm will come in and finance the lawyer to take the case against Honda or some big company because they see that potentially there's this big award. And I know there's lots of legislation and lots of talk about that might not be a good thing, financing litigation, but it's happening.
How is it and this is the interesting part about the industry, is you have all these carriers that when they look at their production at the end of the year, right, at your statistics, right, let's look at our stats. You're like, shit, I'm hitting $150. That sucks, right?
Right.
How is it at some point? There seems to be a lot of, quote unquote capital in the market, right? These guys and these folks continue to go raise money. When do you think that people are going to wake up and say, hold on a minute, I know insurance was a good place to put money, right? I mean, reinsurance was the last 4 or 5 years, there's been more money, more capital being invested in the reinsurance market than probably ever before. And I still think there's insurance companies, as again, I'm not on the insurance company side, but I read as a retailer, there's insurance companies raising money all the time. Why would people at some point, are they gonna get caught with their pants down saying, you know what, we've been giving you money and it's not working.
Right.
If people start pulling out of the insurance market from a capital, from funding the insurance market, what happens, Rick? I mean, how is it that people are still bullshitting their way through this process? Because at some point it's going to catch up to you, right?
Right. Well, I mean, there's tons and tons of money looking to be invested, right? Not just in the insurance business, in all businesses. And so I would tell you that, historically, when people raise money, they raise billions of dollars. Okay. Right. QBE is a huge insurance enterprise worldwide. They raised $300 million, which to me shows that while they're able to raise little bits of money, the big money's not coming into the insurance anymore. And so,
which is a red flag.
Yeah. Well, I mean, they have some people who still believe them, but most people aren't buying their crap anymore. And when you put money into the insurance business, it's a regulated entity and it's trapped, right? In most businesses, you can sell it, you can get your money out. The insurance business, the regulator holds the keys to your capital. So if you're not making money, you don't get your money out. So like GameStop, the big thing where the hedge funds got taken advantage of and the little guys won.
Yeah.
Well,
I actually like that.
There's a lot of hedge funds that are trying to get their money out of the insurance business now because they came in and replaced the reinsurers, right? They're like, oh, this is easy. We can reinsure this. Well, now with all the losses and the COVID stuff, the regulators aren't letting them take their money out. So my guess is they're not real anxious to put more money in because they can't get the old money out. And when you're in the investment banking business and rolling money, you have like a window, right? I put money in, I need it out in 3 years or 5 years or 7 years, right? And I've always told my investors, I don't know, right? As long as we're making money, what do you care? Why do we have to do something to exit in 5 years or go public in 3 years? And you don't know enough about, it's like flying a plane across the country and not paying attention to the storms, right? At some point, you got to take evasive action and change your model or in a game, right? You change your strategy, somebody gets hurt, you got to go with a different player. So, these businesses that try and lay a business path out for I tell the regulators, they say, give me a business plan. I'm like, I don't know. How am I going to tell you? There's 900 other insurance companies, and I'm going to tell you what I'm going to do. I can tell you, but I'm going to change it. I can tell you that because, last week I got calls that said there were 3 new companies coming in to write trucking. I think you may have called me on one and said, I hear these guys are coming in. And, that's something I've dealt with for 40 years. And if they do come in and they want to beat our pricing, some clients will go with them because they want cheaper pricing. Some clients won't. And 3 to 5 years from now, we'll all see how that worked out. But I know I'm always still writing it, and the other guys leave. And I said, well, what happened? And it's like, oh, they paid all these claims and they don't want to do it anymore. So, yeah, well, what did they think when they took your money? that you weren't going to have any claims.
It's almost like insanity, right? It's
doing the same thing over and over again. That is the definition of insanity.
Expecting a different result.
But it's different people, right? I can name insurance companies that have gone broke, or if they don't go broke, they reinvent themselves and they stop doing trucking and now they do D&O. And then the D&O market goes bad and they get out of D&O and they go do something else. I have never canceled a class of business. Right. I've never got out of property. We don't write a lot of property, but that's because everybody else is like half of our price.
It's not that you're willing to run away from it. It's just that you're willing to price it correctly and adequately.
I mean, again, as an insurance company, my job is to make happy customers. I think as an industry, we make very unhappy customers. And that's why Morgan & Morgan's so big down here, is because they end up suing the insurance companies. When you buy a homeowner's policy from somebody and they let you underinsure it, they don't give you wind and they don't give you flood, then the storm comes and you get half your claim paid.
Yeah.
You go hire a lawyer.
Let's talk about this, Rick, real quickly. This is having you here, I think is a huge advantage. And I hope our insureds are listening to this, and we're definitely going to share some content. How do we shift pricing, the mindset? Why? They're so fixated. And the way I look at it is, there's certain things in my life that I spend a lot of money on. And there are certain things that I don't.
Right.
Insurance is something personally that I think for gives people a peace of mind, right? You want to know that your house is insured, your car is insured, your building's insured, you have liability coverage. At some point, I don't think that you've ever been the most expensive guy, and I don't think you've ever been the cheapest guy. I've always think you've been, since we started doing business, I feel like you've always been fair. Like, this is what it is because this is the math.
Right.
And you're in business to make money, because if you make money, you're going to represent your insurance. You're insured. You're going to be in business. We're not going to be, what's a nightmare for me is rewriting shit all year long. I mean, just the investment on human capital to get that done is sometimes exhausting. Where I've had to change our model and be like, look, guys, if we feel the clients with the right carrier, with the right fit, and they want to go for $500, and they're not a client for JAG. And I say that respectfully, but it's just a fact.
Right.
How should the consumer, the insured, I hate to call them the consumer, but how should the insured maybe look at pricing from a different perspective, saying, okay, I'm going to insure my dump truck owner operator, and with Prime, it's going to cost me $15,000. And with X, it's going to cost me $10,000, right? That's a 40% difference, or 50.
Everybody either spends money, like you said, on stuff they like and doesn't on others. I don't spend a lot of money on insurance, right? I don't sell, like on my helicopters, most people tell me I should have 10 million limit, right? By law, I have to have a $50,000 limit. So I carry more than 50, but I don't carry anywhere near 10. So to me, part of it is being a smart consumer, right? Buying it right, and then understanding that, you can buy a cheap car or you can buy an expensive car. In fact, you can buy an expensive Porsche with no engine in it if you want, but it ain't going to go when you press on the gas.
Correct.
Right? So what is the expectation when you buy insurance? You want the cheapest and you want it to perform like a piece of crap when you need it? Or do you want to do it right so that the expectation is that you get what you want when the claim occurs? So, I own a condo over in Naples. It's a 3-story building. I own a 3-bedroom condo. And these guys ask me every year to review the insurance.
For the association?
Yeah, and they insure it for $1.7 million. And I tell them, you're kidding yourself. The replacement cost on this building is at least $3 million, right? But they like the premium they're paying. They like the cheap premium they're paying, and it's insured for $1.7 million. And I say, you know what? I don't even want to discuss this with you guys because, you're banking your expectation on a builder who says he can replace this building for $1.7 million in a letter to you, right? I just do quick math, square footage times how much per square
Construction
foot.
characteristics.
And because you got one contractor who says he can do it, he won't even be around when after the storm hits, he will be so damn busy, he isn't going to want to come fix this building. Now, if our building's the only one that's damaged, you're still screwed, because there's no way the replacement cost on this building is 1.7. It's $3 million. So even if it's a fire, not a storm, because we don't insure the value, which is the big problem down here in Florida, everybody underinsures their building.
And I will say that the markets are catching up to that, because one of the things that they're getting stronger on, a lot of the companies that are really focusing high on property, is replacement cost valuations, because a lot of them also got hit with claims after Irma, Harvey, Maria, and all these other, storms, Matthew, Michael. And what they don't realize is these guys end up in a courtroom. They issued a policy for $2 million at replacement cost.
Right.
And, the replacement cost is $3 million. Well, now instead of, you collected money for $2 million, and now you're paying out $3 million.
And they can never get the $2 million. When you underinsure, even in a total loss, you can't get the limit on the policy. That's why people go hire Morgan & Morgan, is because they're like, it says $2 million, but I can't get $2 million, right? Pay me the $2 million, well, no, you should have been paying for $3 million. Correct. And you didn't. So, you don't get the full benefit of the policy. Co-insurance it's very confusing to people. That's why, as an agent or broker or an insurance company, if people want you to do something that's fundamentally not right to start off with, it's like bad fundamentals in a sport, right? You teach a kid bad fundamentals, he's not going to be as good as he could have been if he had great fundamentals and you laid all the track and you had all the foundation that you needed. Then it's easy for us to be good partners for each other. But where you only buy half of the insurance that you should be, and then you expect me to pay the full claim, that's a total disconnect.
That's not a fair deal. It's funny because when you look at, about pricing, if you look at a home, for most Americans, your home is your biggest asset. Some people work their whole life to pay off their mortgage, and then they're sitting on an X amount of equity. So I'm always like, well, your policy's of $700. So I'm like, okay, but it's with a good carrier, right? Good company. If God forbid you have a loss, you're going to get actually paid, because there's a shitload of fly-by-nights in this state. Okay. And then I take $700 and I divide it by 12. And I'm like, well, if $700 is going to determine your decision, you're probably living in the wrong house, or you know what I'm saying?
Right.
And the way I look at it is, I don't think that insurance should be, I look at insurance almost like a life insurance policy, right? If my house burns down, this policy is going to repay to rebuild it. And I think that the perspective, specifically in South Florida, for whatever reason, it's such a price-driven market. And, you always, like you told me, stay tight. You've got to I'm really making an effort, and JAG is making an effort to shift the perspective of these insurance and be like, you guys are so focused on your back office and trying to beat up, the insurance guy and the copy paper guy and the light guy. And why don't you guys focus on growing your business, and you pay us to make sure that you're covered? And there's a value to that. It's like, I was talking to my dad during the week. I'm like, Dad, people pay I pay $2,500 a year and I never had a claim. Okay, we'll take $2,000 times 10, right? That's $20,000. And then in year 11, you have a loss of $400,000. Well, guess who won? You won, dude. You know what I'm saying?
Right. Most people never think they're going to have a claim. That's why they like cheap insurance. But, if you pay for insurance or don't, right? If you don't pay for insurance, in the back of your mind, you have this risk on your own. You have no life insurance, and potentially your kids are, going to be without you. So that's why you buy life insurance, is to have peace of mind that your kids are taken care of. So now you buy insurance with too low a limit, or you're focused on the price. So now you have partial peace of mind, right? I don't know what that is, right? Because it's not peace of mind.
No. And
right? If you do it right and price isn't your focus. Now, again, I would tell you that Florida, Louisiana, Texas, the coastal states that have the most storm exposure, they all have Citizens insurance companies, which are the state-run insurance companies. And they're the ones who actually, in many cases, keep the price down. But as an insurance professional, we should say, if you want the cheapest, it's Citizens, right? In other states, they don't have Citizens. So I tell them, look, you want the cheapest, go to Farm Bureau here. That's part of being a good professional, is being honest with people and just say, look, if you want the cheapest insurance here in Florida, Citizens is it. Guarantee it. Because that's the government backstop, and it actually does keep rates lower. It does support the real estate market down here. It's like helicopters. If you can't afford the insurance on a helicopter, you probably ain't buying a helicopter.
Yeah.
But if insurance was affordable, the more it comes down. There's a company called Robinson Helicopters. They've sold more aircraft than Boeing or anybody else, and they sell these cheap piston helicopters. Very affordable, very trainable, and the insurance is about $20,000 a year or less.
Well, I ain't buying a cheap helicopter.
For a helicopter, that's pretty cheap insurance.
You guys ever watch the movie Ford versus Ferrari? You seen it? And I love it when Henry Ford says he gets pissed off. He's like, I don't care how much money it costs me. We're going to go win the Lamar. I took it as like, if you want to win, you're going to have to spend money in building the best engine, the best engineers, the best of the best for you to become a winner. And, if you want good product, it ain't going to always be cheap, I hate the word cheap. I think sometimes cheap is missed.
So, I'm not sure you know this, but I got arrested in Chicago. You may not know that. This was like 5-6 years ago on Father's Day with my dad and all my boys. Spent 3 days in Cook County Jail. I fought it, got it kicked out, and I sued the cops and won. They paid me and pled guilty to wrongful arrest. But, I'm sitting there. And so now we provide personal liability policies that would cover you just like me. So I'm sitting there in jail and I'm thinking, what kind of insurance policy would cover this? And what kind do I want? Do I want the cheapest policy? Who's going to hire some cheap lawyer? No, that's not what anybody wants. When you're in trouble, you want somebody who's going to spend whatever it fucking takes to win and or get you out for the best cause. Right. And so, whether I'm selling somebody truck insurance or police officers, now we sell them their individual policy because they're under attack now.
You're saying that to police officers?
Yeah.
Like professional liability type thing?
Yeah. It covers them 24 hours a day, 365 days a year.
But are you selling it to the union or to the actual city?
Both. Well, all. Some police officers are buying it directly. Like Boulder Police Department in Denver Police Department, they're buying it. And then now the big national associations are coming to us. So we'll do it either way. But again, I'm not going to be the cheapest. I'm not going to be hiring the cheapest lawyers. I'm not going to treat you different than I would treat myself. And I always tell all my people, look, if you think you're selling somebody, freeze frame, walk over to their side of the table and listen to yourself talk to them. If you wouldn't buy it for yourself, then I don't want to be selling it. So, the policy that will defend or fight for you is the same policy that I would want. So if I was a trucker or I was a restaurant owner, somebody sues you for COVID, every other insurance company is excluding COVID. So that when these lawyers start suing them, which is going to happen, they're going to say, there's no coverage. Well, how good a partner is that? Right? And they're like, the likelihood of that. Well, that's what we buy insurance for, is unlikely things that could happen. Well, if you're excluding COVID, active shooter, assault and battery, all the what are you taking my money for? Right? And the lawyers use that as part of the game. So if I sue you for slip and fall and I sue you for assault and battery, doesn't even have to be true. I just put the allegation in the lawsuit. Your insurance company is going to tell you, you got to go hire your own lawyer. Well, how good a strategy is that for you to add more lawyers to the problem, right? My goal is fewer lawyers.
Simplify it.
That's why I want to include COVID and if I actually think you're going to assault and batter somebody, why would I exclude it? I shouldn't take your money if you're actually going to assault and batter people, right? That's underwriting. So when you underwrite business, you either take their money and do the whole job or don't take their money, right? And that's what I think about insurance. They want to take money, but they're either, trying to say, well, he's so good, he's not going to have a claim. But if he does, we're going to exclude COVID, assault and battery, active shooter. So they really don't trust you. They're trying to be tricky, right? We'll give you the coverage we feel safe about, but we won't give you coverage you really need. And at that point, the buyer should say, you don't seem like a very good partner to me. And so when I go look at anybody's insurance, I say, show me your policies. I go right to the exclusions. That's all that matters. Well, what aren't you covered for?
Let's not take it too far, Rick. I mean, right here for contractors in Florida, it's become very difficult. And maybe you can educate us on this, but I have several friends of mine who are contractors that are extremely frustrated. Why? Because they're a startup. They're a medium-sized company. And the famous question is, what are you doing residential versus commercial? Now, that's sometimes a question that's very hard for them to gauge because every year is different. So really, when they put it on an application, they're kind of giving you their best guesstimate, but they really don't know. It could turn out to be 80% residential and 20% commercial, or vice versa. But to find a carrier that will insure a contractor that's doing both commercial and residential work is very difficult. And I guess it has to do because maybe residential contractors are prone to more liability losses because of homeowners who buy, and I think if there's a carrier that actually absorbs all the risk, I'm not sure how you price that, and says, okay, I don't care if you do residential and commercial, I'll write it. And I think there's a space for that because,
again, most of these companies, it's like liquor. Right, if you own a restaurant and you sell more than 50% liquor, they don't want to do you, right? Liquor sales have to be less than that. So the good restaurants that sell a lot of wine, they lie because their wine sales are bigger than they want them to be. But, residential contractors are definitely, insurance carriers think, oh, little old grandma, white-haired lady is going to be the plaintiff. That's not good. Right? Businesses suing businesses aren't as scary to insurance companies as grandma getting taken advantage of by an insurance company. Now, the truth of the matter is it doesn't matter. If you're a good contractor, you should have an insurance company that feels comfortable saying, look, I understand your business. One year you might do 60% residential. The next year you might do 20% residential. It's kind of depend on the market. And if I tell you, look, you can't do more than 40% residential, who am I to tell you how to run your damn business? And in some cases, I might be forcing you to do other business that's higher risk because you don't have the flexibility to do what makes sense. So, we're doing contractors in all 50 states. We've done them for 20 years, roofing and the higher litigated classes are the ones we've done. Okay. So drywall, electrical, those are all trades that haven't had a lot of problems, but they're getting dragged into lawsuits more now because if you do a apartment building or you do multiple family dwellings that are connected, they now sue everybody.
One of the common complaints from contractors is how when they get audited on their sales, their sales really isn't, it's really not what they're taking home, right? Because there's materials involved in there and whatnot.
Oh, and that we deal with that and everything. So if you do helicopter skiing, okay, you look at the gross receipts. They charge like $600 a day.
Okay.
400 of that's going for the helicopter. And
Correct.
guess what? The helicopter's separately insured. So when I insure the guiding portion, which is like out of the helicopter, I should be looking at the net, not the gross, right? Because you take the helicopters out, costs out, and that's separately insured. So just like with a builder
And
right
that's what
now,
they want.
lumber prices are going up, right? I don't know if you know it or not, but lumber has like doubled or tripled in the last year.
Well, I'm seeing it because
And that means contractors' gross receipts are going up, but there's no more exposure. He's building the same damn house, right? So
He ain't making more money with it either.
Yeah, if timber would have been a third, and you're just auditing based on gross receipts. So, it needs to be exposure rated, and you need to give them the flexibility to do anything they want, residential, apartments, commercial, and you give them a rate on each one for the net less their costs, right? Mm-hmm. And that's how you really zone in on what their exposure is. Insurance people like gross receipts or payroll because it's easy.
Yeah.
Right. That's easy to audit. It's easy to look at. But again, a good partner wouldn't just be looking at what's easy. They would be customizing a relationship and a way of charging you and auditing you that makes sense.
And that's all they want, man.
So they feel good. You feel good. You can explain it. I can explain it. That's the thing that never makes sense to me either. And that's why, as an agent or broker, I was hell bent on getting my own company because it's common sense, right? So we have the flexibility to do commercial, residential, stucco. I just met with one of the biggest drywall contractors in the state of Florida that's getting canceled by Cincinnati. I mean, Cincinnati wrote a lot of the contractors down here at preferred rates. And from what I understand, they're out.
All right, Rick, as we wrap this up, man, where do you see the industry in the next decade? Where do you see insurance in the next 10 years?
I mean, I would say that it's just like the banking industry. I think I said this earlier, in 2008, the banks, who were all the smart guys, almost ruined the economy because they loaned all these people money to buy houses they couldn't afford. And then the whole banking crisis crashed. AIG went broke. The Hartford went broke. We all bailed them out. So the banking industry is different than it was then. Payday loan stores, pawn shops, all these businesses have exploded to service the lower income people because banks don't want to deal with them anymore. And you see that in insurance too. They don't want to deal with small policies, right? I give people say, $500, that's nothing. I do a lot of $500 policies. I don't care how big the account is. I care how good the relationship could be. So, I don't think the insurance business is ever going to be the same. I don't think, there's going to be billions of dollars coming into it, which if it does, if what's happened in the past happens again, the market will go soft again. And I will shrink again because there's not as much opportunity. As an agent or broker, if there's 100 new insurance companies out there selling at half the rate, you're going to be fine. Because you're going to be making customers happy because rates have gone down, and that's really what
do you think
want.
there'll be a soft market again or no?
Well, I think.
Or do you think the market will find its stability, we'll call it, or its?
I think there'll always be stupid people who think they can attack a certain class of business. Whether it's condominiums in this area that are newer than this, and they'll go cheap. Right. And over 10 years, and over 10 years, they won't make money and they'll create unhappy customers. The way to create happy customers is have a good product that they value and they appreciate and they'll pay more for, like a Porsche, right? Or, something luxury that people do spend money on. So insurance, it just has this, everybody hates it. Everybody hates insurance, right? They do. I hate insurance, right? It's not a good thing. Now, I'm excited about it because I think there's opportunity because the bar is so low. In gymnastics, if they could only jump an inch off of the ground, and they couldn't do flips and shit. And we're sitting there watching these weak gymnastics. It's like, dude, I could do that, right? So that's the opportunity, is for us to show people what is possible and what can happen, but it can't happen for cheaper, right? I can't beat stupid pricing and then jump higher, leap buildings in a single bound and win everything. You can't do that by being cheaper than Citizens, right? Citizens is really the market of last resort. And a lot of people call me that, right? They're, oh, you're the market of last resort. I'm like, well, since the guy who did it 10 years ago went broke and I'm still here, I think I'm the smart market. I don't think I'm the market of last resort. I didn't compete with stupid. And, kind of the market has proven that, if we would have competed them, we'd gone broke like them. It's like trying to, DeLorean motor cars. You remember? You're probably too young for DeLorean. It was in what was the show with Michael J. Fox where he went back in time in the DeLorean? Yeah. So, that could have been a great car company, but it wasn't. He wasn't able to execute. You got the money, you can form a company, but can you actually execute and make it successful? So, fundamentally, the two things that no insured and most agents don't ask is fundamentals. So if Citizens or some insurance company offers you a new market as an agent or is offering your clients insurance, I would say, what's their combined ratio, right? If it's over 100, they're losing money. And what's their expense ratio? So, if you give them $1, how much of that dollar is gone in smoke just to issue a piece of paper? And I would tell you that most insurance companies spend 40 cents to issue a policy. Prime's is 22 cents or less. So fundamentally, we have a much better starting point. We have 80 cents of every dollar left to pay claims, where most other companies have 60 cents. So, and then, if you're going to build a house, you want to go with a builder that's losing money. Every house he's building out there, he's losing money on, and you're giving him more. Your house might not get finished. You might end up in trouble.
Running with your money.
But, does the company you're doing business with make money, or do they lose money? AIG loses money. Nationwide loses money. Scottsdale. All these companies are losing money. So when they give you a cheap price, you got to think, whoa, maybe I shouldn't take it. They don't even make money, right? So do business with people who make money.
Collect more money and raise more money and raise more.
They have billions and billions of dollars. So as they lose money, they just tweak it, move it around. But that's not going to make them a good partner. And they certainly aren't going to be focused on spending more money to save your ass, right? They're focused on trying to, get out of trouble all the time. Again, playing defense. You don't win playing defense. You might tie, but you got to have an offense to win, right?
No doubt.
You got to at least score one run to win, or one bucket to win. Yeah. You play defense, you might stop them from scoring, and it's a draw. But, in the legal system, there are no draws. There's always a winner and a loser.
All right, well, thank you so much, man. This was awesome.